You read it right. I'm upgrading Sofi stock to a buy. I had been waiting for the company to deliver on a few metrics that management had promising it would deliver, and in its latest quarterly update, I really liked what I saw from Sofi Technologies. So in this video, I'll go through why I'm upgrading the stock to a buy. Previously, I had the stock rated as a hold, and I'm upgrading it to a buy. So let me go through the details on why I'm making this change.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So starting with profitability, management had been saying all year that they're going to deliver profitability on the bottom line in the fourth quarter of 2023, but it's not always the case when management teams say they're going to do something that they actually do it. So I couldn't just take their word for it and say, okay, SoFi is going to be profitable in the fourth quarter, 100% it's going to happen, no questions asked. That's rarely the case. I wanted to wait and see for them to deliver this result. And they did. Revenue increased to 615 million in the most recent quarter. That was up 35% from the same quarter the prior year. And net income profit on the bottom line, 47.9 million. That was up from a loss of 40 million in the same quarter the prior year. So not only did SoFi deliver profitability on the bottom line, but they did so robustly. It wasn't just like 1 million in profit or 2 million in profit. It was 47.9 million in profit. That's a nice number on revenue of 615 million. That's just over 7%. It looks like less than 10%, almost 10% in net profit margin. So a solid profit to be sure. What's more, management said that this isn't a fluke, that they expect profitability to continue going forward, 2024, 25, 26. In fact, they gave very enthusiastic earnings per share guidance, not only for 2024, but beyond. Let me share that with you as well. So the earnings power associated with its growth, management said, is notable and could drive between 55 cents and 80 cents per share GAAP earnings per share in 2026. Moreover, we see 20 to 25% earnings growth even beyond 2026. So they're expecting to grow earnings per share by multiples over the next 2 years until 2026. And then from then on out, to grow earnings per share by 20 to 25% beyond 2026. Now, again, I'm not taking this as, okay, 100% this is what's going to happen. But now, after management has delivered what they said they would deliver in 2023 in achieving profitability on the bottom line, I've increased the probability that they will actually achieve this. So anytime management makes progress in delivering what they say they're going to deliver, I give them a little bit more credibility, a little bit more each time they do it. So here's another long-term forecast management is giving investors. If they are to hit this target, I'll give management that much more credit. So as they build this reputation, as they build credibility with me, I give them more credibility. They earn it. I don't just grant it to them. They need to earn it. And they did take a step forward in earning more credibility from me by hitting profitability on the bottom line in the fourth quarter and doing so robustly, not just barely eking out profitability on the bottom line. And Wall Street tends to agree with management here. For the estimates, Wall Street expects in 2024 7 cents per share in earnings per share for SoFi in 2024. They expect that to more than triple to 25 cents per share in 2025, and then for that more than double to 51 cents per share in 2026. So Wall Street expects robust growth from SoFi. Let's compare that with SoFi's forecast. They said between 55 cents and 80 cents per share in EPS in 2026, although Wall Street thinks 51 cents. So Wall Street is below the lower end of what management is forecasting they will deliver in 2026. So Wall Street hasn't come to the conclusion yet that SoFi management is going to deliver on this forecast. And again, it goes to the fact that this is a relatively younger company. It just received the bank charter a little over a year ago. So it hasn't established itself as a credible management team where investors can just take their word for everything they say and just mark it down on their financial models. That is not the case yet, although they are making steps forward, and the latest profitability on the bottom line was that one step forward. Additionally, SoFi said that they're going to deliver profitability here in 2024 and going forward. They're doing this cautiously. In the latest quarter, management said that they're going to decrease lending. They observe some cracks in the economy. They expect contraction in GDP in 2024, and they expect lending to come down. So they're being prudent in not making as many loans in 2024 because they fear that those loans could default at a higher rate. I like that move. I think they're being cautious and prudent at a time where it's called for, because interest rates have been high and have remained high for some time now, and people are expending a lot of that stimulus money that they got in during the pandemic. A lot of that is running out now. A lot of that is running out now, and people's balance sheet is becoming back normalized, where they don't have this excess cash to make up for all their extra spending decisions. They're going out a lot more. They're spending a lot more on travel and all of these excesses that people have been undertaking coming out of the pandemic, really, because you've been stuck at home, and so people wanted to unleash some pent-up demand to get out of the house and do some extra things away from home, and that's been depleting their bank accounts. That's been depleting their excess savings, and SoFi is starting to see that, and in reaction to that slowing economy, they're pulling back on lending. I like that decision. I think that's a prudent decision. I think that's smart for management to do that. Finally, valuation has become attractive. I have here SoFi's price to earnings forward ratio, and in comparison to some of its rivals, you can see SoFi is trading at a forward price to earnings of 24.5. The only stock more expensive here in this group is Visa at 24.74. By the way, I can't speak highly enough of Visa and how good of a business that is. I have Visa rated as my top dividend stock to buy for 2024. I own Visa stock, and I've been talking about the success of Visa for several years now. I just really love that business model. But back to SoFi here. SoFi is trading at a forward price to earnings of 24.53, a little bit more expensive than Block at 17.55, and a lot more expensive than PayPal and Bank of America. But SoFi is also demonstrating a lot better growth in terms of profit expansion than PayPal and Bank of America. PayPal specifically is only expecting to grow earnings per share by around 2% in 2024, whereas SoFi is going to increase earnings per share meaningfully in 2024, and then it's expected to do so multiples more in 2025, and then more than double in 2026. So you're getting much better earnings per share growth with SoFi than you're getting with PayPal, the expectations of which, right? So it deserves a premium valuation, although I don't know if it deserves as much of a premium. Still, relatively speaking, SoFi stock valuation has now become attractive. And so for all of these reasons, I'm upgrading Sofi Technologies stock to a buy. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.